Namaskar, this is Akhilesh Bhargava. Welcome to an episode on HW News exclusive on business and finance with me. Let's talk about the corporate rate cuts announced by the finance minister today as part of the government's continuing battle against India's economic slowdown. India's economy has been slowing down quarter after quarter. Our growth rate has dipped to a 6-year low of 5% in the last quarter. In fact, according to us, India's growth rate has been slipping consistently for the last 8 quarters. Unfortunately, the government has been unwilling to recognize this slowdown. But now, with the monster staring in the face, the government itself is recognizing that there has been a slowdown and it has been announcing sector-wise measures, relief measures as we would call them, in order to revive those sectors and improve India's economic growth rate. So far, the government has announced measures for various sectors in a series of announcements. Relief measures have come for the auto sector, for exports, for real estate, for affordable housing, for banks, NBFCs, housing finance companies, and as the FM says, they intend to continue making such announcements. Today's announcement was in respect of corporate tax. The purpose is to ensure that the liquidity and cash flow of corporates improve by virtue of rate cuts. Because if the government collects lesser taxes, it puts finally money in the hands of corporates. And as part of that, we have had significant corporate rate cuts today. But then, these are primarily applicable for those companies which are willing to forego, which are willing to give up any kind of exemptions, incentives or tax holidays that they enjoy under the Income Tax Act. Thus, if you are willing to forego all your exemptions, tax holidays and incentives under the Income Tax Act, then for a domestic company, tax rate has been cut from a base rate of 30% to 22%. And if you are willing to again forego these incentives and pay tax at the rate of 20%, you will be exempt from MAT. So, for those companies which continue to enjoy exemptions, tax rates will remain unchanged. They will also pay MAT at the rate of 15%. It used to be 18%, now it will be 15%. But those which are willing to now forego these incentives, tax rate comes down to 22%. Along with surcharge and cess, it comes to 25.17%. That is an actual almost 28% reduction in the tax rate from what it is at present. These reductions apply with effect from 1st April 2019, and for that, the government proposes to come out with an ordinance so that they are effective accordingly. The next announcement in these rate cuts by the finance minister has been for those companies set up after 1/10/2019 and make investments in the manufacturing sector. For them, the tax rate will be now 15% instead of 25%. But even they will have to choose not to enjoy any tax holiday, exemption or incentive. And the FM says that the net impact of these corporate rate tax cuts is expected to be a loss of tax collection of 1.45 lakh crores for this financial year. Further, the FM also announced that the additional surcharge levied on capital gains in the budget of 5/7/2019 will now be withdrawn. She also said that those buybacks which were announced before the budget announcement, they will now not be taxed and they will continue to be taxed as per the earlier laws, which is pre-budget tax laws. She also said that expenditure towards programs of research institutes and IITs will now be eligible for CSR compliance by the corporates. So this is the corporate rate cut announced today. In itself, it is a sizable rate cut, and as the FM says, the government loses 1.45 lakh crores in the process. The sad part is that the government has been making these announcements on a piecemeal basis, on a sector-to-sector basis. The government has not announced so far the total reform or relief measure that it has in mind in order to ensure that the slowdown that we are facing at the moment is stopped and we resume a normal growth rate path. This is yet another piecemeal announcement, and let's examine what has the government achieved by doing this, or what has the government done? And let's also examine what has the government not done in respect of tax rate cuts. The first one, why is it that tax rates are being cut only for corporates, only for domestic corporates? Why not for individuals? Why not for partnerships? Why not for other non-corporate associates who will continue to pay tax at the rate of 30%? In fact, the informal sector, which consists of individuals, partnerships, and non-corporate associates, has been the most affected by demonetization and GST, and they deserve relief. And surprisingly, the government announces tax rate cuts only for corporates. So our first question is, why is it that rate cuts have been announced only for corporates? Our second question is there really a strategy for making these announcements, or are these announcements being made only pursuant to some loose strategy being pursued by the government in order to assuage demands that come up from time to time? Because if there was a strategy, these rate cuts would have been announced much earlier. The slowdown has been evident for long. Why were they not announced in the budget, and why now? And why so late? It appears to us that a strategy is really missing, and that's a worrisome matter. You are battling a slowdown which is unprecedented according to us, and that has to be pursued by a large strategic game plan. And when these kind of patchy measures are announced, to us a strategy is missing. These piecemeal announcements in fact cause confusion, they cause uncertainty, they also create a sense of expectation that what more is coming before the taxpayers really move further. Because the government is expecting that by virtue of these rate cuts, there will be an impetus to growth and investment in the Indian economy. But we think that unless we are very clear that these are the total measures being announced, all the taxpayers, all the businessmen and corporates will prefer to continue to wait and watch, as we are seeing in the case of interest rate cuts. Interest rates have been cut, they continue to be cut, but because we are expecting more interest rate cuts, the corporates are refusing to borrow. That's the impact of measures which are taken in isolation and not part of a total game plan. Our next question on this is, why is it that incentives are being announced only for new companies into manufacturing? Why is it that incentives are not being announced for other sectors, say exports for example, or any labor-oriented service sector? Why only for manufacturing sector? That also tells us a total strategy seems to be missing. These are regarding the rate cuts. Now let's talk what has not been done. According to us, if you talk taxation, then the larger issues are simplification, harassment. The government needs to simplify our tax code, which is complicated. The best of brains find it difficult to understand. And in case you want to improve the ease of doing business, you want to restore the confidence of the investor to invest in new projects, apart from rate cuts, you need a simplified tax code. You need to ensure that tax harassment stops and the likes of CCD founder do not commit suicide because of that. There is no reform in this regard. In fact, what has been announced in these rate cuts are relief measures and not reforms. Because in reforms, the tax law is simplified, it is made lighter, and the government actually vacates areas where it has been legislating. So our first issue is simplification not done, nothing on tax harassment, and nothing in terms of complications. Income tax return forms continue to be extremely complicated. Why no measure to make them simple? That's a larger tax picture. Further, if you want to prune tax rates, why are you not doing away with double taxation in the form of dividend distribution tax? Dividend distribution tax is an irritation. It's a double tax of the same income. And in case the government really wants to enthuse the stock markets, which got very enthused today, the index went up by 2000 basis points. But in case you really want it to go up in a long-term durable manner, do away with dividend distribution tax. It is an unfair levy. You are taxing the same income twice. Why does the government not talk about that? As part of tax reforms, as part of improving ease of doing business and reinforcing the confidence of the taxpayer and the investor, why is the government not talking about issuing tax refunds on time? Today, the FM did not speak about that also. And finally, on the taxation front, why is the government fixing tax collection targets which are so unrealistic, which have such a huge disconnect from the real economy that they can't be met? And in order to meet them, all kinds of coercive recovery measures get initiated, which are very often fatal to the enterprise that face them. These, according to us, are the larger picture. In response to these measures announced by the finance minister, the prime minister said that it was a historic move. He said it's a win-win situation for the 130 crore population of India. And he said that it will encourage and attract investments in India's manufacturing sector and in the Make in India program of the government of India. We really think that need not be so. Investments will come if confidence is restored. Investments will shoot up if ease of doing business is made better. Investments will be encouraged. The corporate will be willing to invest if compliance cost goes down, if harassment goes down, if the laws are made simpler. And nothing of that sort has been announced so far. And when we talk about battling a slowdown, it is not these patchy piecemeal measures which are needed. What is really needed first is a big announcement to tell this is the big picture that we wish to pursue. And then, as part of that, you would have these piecemeal announcements. Unfortunately, we still don't know the big picture. We still don't know whether the government considers the slowdown to be cyclical and whether it is serious about starting any kind of structural reforms which we think are needed in order to really arrest the slowdown and revive the Indian economy. So yet another measure, but its impact to come through will take time. The stock market's euphoria, according to us, will be short-lived. Unless the GDP growth doesn't come up, tax rate cuts will certainly put more money in the hands of corporates, but whether they will be willing to invest it into new projects will always remain a question mark. This is Akhilesh Bhargava signing off till we meet again. Namaskar.